Hello, this is Archana, the Butterfly Queen. This is a midweek update for my subscribers. So let's go ahead and see the kind of trades that I have done and made adjustments to. So Caterpillar, right? Caterpillar, I have a put calendar. Now that one, I have to modify it. Now, the reason why I am modifying it and still not closing it, okay? So I have a small loss in it. It's actually break even, kind of. I didn't have much. So it did not break this 55. But you can see the Bollinger Band is opening downwards, okay? And the way all the tech, like Airbnb and all these plays, Snow, they have not been popping recently, but their earnings, right? Airbnb popped up, TTD popped up on earnings. So people are underinvested in tech. So I think that when the dollar came down, the XLI or the value stocks in industrials did not fall. Now we may have that kind of a rotation where the industrials take a break and some of the tech that have not run in Jan. Yes, I know everything ran up in Jan, but there are some tech portfolios, some companies like MDB, like Snow, and you can look at Airbnb, all these and TTD, these did not run in Jan at all. And now that Airbnb has gapped up so much, GNRC has gapped up so much, TTD has gapped up so much, I think we rotate into something like that and still remain within that below the 4200 SPX. So for that to happen, this Caterpillar has to give in. The Bollinger Band of looking downwards is a good start for it. The squeeze is also to the downside. So what I did, I changed it. Okay, I had the 235. Let me put my pen down. So let's look at this, right? I have my thing. So I had sold the February, right? I had sold the February 235 put to buy March 3rd 235 put for 147 debit. Now what I did was only 10-15 cents were left in this put. So I bought that back and sold the February 24th for a total of 71 cents credit. So now instead of 147 debit, my entire debit is only 76 cents. Okay. So now this is a nice way to manage your risk and still be able to. I reduced my cost basis. So my thesis has not changed, right? Even though it has not moved fast enough, the calendar is anyway a slow trade for it to work. And that too has not taken because it goes one day up, one day down. So I reduced my cost basis, having at least 3 weeks or so in terms of more than 3 weeks in between the expirations for the calendar helps you to do that. Now, another thing that I have Meta. Okay, I have Meta put calendar again. I am looking at it for slowly to keep coming down to try and fill this gap. Okay. Now it is below the 8-day. So that helps, right? Now it is below the 8-day. The market is bullish and that's the reason it's not going anywhere. So I'm just waiting on it. This is a profitable position. Now the first ones that ran up the lot, right? The most, Netflix and Meta ran up the most. So they are just consolidating and slowly fading a little bit. So nothing extraordinary. I'm not bearish or so anything. So, but I just think that this, right, it just needs to get below this 354, 353 to 354 area. Then it can at least go down to this 340 area, right? So I'm not looking for a big thing. Again, I have you because it's going slowly. A calendar or a diagonal, the way I have configured is good. Now, what else did I do? BNTX is one that I just bought. Okay. So BNTX, I have been watching this chart for a while. it is doing, I mean, if you look at it, if I just zoom it, okay, it's done nothing, right? But it has just been nicely doing this rounded bottom kind of thing. Now it's about to it's so tight. It's not only that it's tight, it is forming a rounded bottom. And I'm looking at it. We had news with US government saying that it is going to be, the lawsuit for anything related to COVID should be targeted towards the government, not Moderna. So that itself is a small catalyst in itself. So this is going up today, So I wanted to get in, but it's not liquid enough. Then I'm just thinking what else, how to get into this. So this is how I'm talking about configuring the trade, right? Why I'm thinking it's not moving. It needs some catalyst. That means it needs an earnings or something like that. So then I'm looking at what is Moderna doing. Okay, if I look at Moderna, it still has the lawsuit against it, right? Even though it has to be targeted to US government is what they said. But Moderna has earnings 223. Okay. BNTX has earnings in March. Okay. Now, longer the base, right? When you look at the base, longer the base, higher the space. So I don't know how far it can go, but because it doesn't have liquid options, I was thinking, how do I take advantage of this gap fill, right? At around this 190, 200 level, this gap fill. So what I did, I needed something cheaper. So then I'm looking at the options. This is how I was, for last few days, I've been looking at how do I configure a trade here. So now yesterday there was nothing. I tried to get filled yesterday for a calendar. It wasn't filling me. So I just looked at it. Today there was over here. Okay. If I open up, there was, I saw that there was some, okay, here, this 190, right? I saw over here 190. First of all, there's a lot of open interest. And then there was something bought here, right? So I'm like, okay, is it bought or sold? It is right at the gap. So probably sold. Even if it's bought, there is so much of resistance here. So it's probably sold. So I was like, okay, can it go to 190? Yes, it can. What are the triggers? Moderna earnings. You have a catalyst in terms of the lawsuit now. Then we have BNTX earnings. So I went ahead and configured. Here, there is nothing much. Okay. There's only one over here for 160, but it is taking so long to move. When, right? Moderna earnings can do it. So rather than go to March, I wanted to give myself some time. So I went to June. And I was able to get this 175, 190 call spread. It's a $15 wide call spread. And I was able to fill for, right? $15 wide call spread. I was able to fill for $2.60. So now on earnings, if it pops up, if it goes beyond this 190 by June, I have a lot of time. Okay. Now that's a $15 wide. That means I can make, it's going to be $12.40 profit. Okay. This is profit. So risking $2.60 to make $12.40. Okay. Plus I'm giving myself we are almost February, March, April, May, June, almost 4 months. Okay, so I'm giving myself time. There is a catalyst. It's a rounded bottom. So many things are lining up. It has not yet moved. So gave myself some time. That's how I configured the BNTX. So that was BNTX that I did, how I modified my Caterpillar trade to reduce my cost basis. Now, because of the thesis that, okay, you're looking at Caterpillar, Deere, and all these things held up the entire 2022, and they still held up in January. They did not fall. And with tech running and, everything still lining up, people are underexposed to tech. They may want to get back in there before we have another leg down. So something has to give in, right? If you're looking at it, S&P is all these stocks together, all these sectors together. So if tech is going to run and hold up, something has to give in, because trying to go with rates going up the way they are, right? TNX, we have TNX now coming to 3.813. Now with unemployment so low, CPI still in line, but whatever, right? Then the rates are going higher. Today retail sales was high. So this is like interest rates, right? So we can easily go to this 3.882. This should create some kind of sell-off in the market, which it has not yet created. So even if there is no sell-off in the market, how does it run up beyond 4,200, right? Something has to materially change. I mean, unless and until the Fed comes and says, we are fine with this unemployment and fine with the inflation is done, it's not coming back up at all, then something happens. But other than that, I don't think he's going to say that, because that will be the moment Jay Powell says something like that we are done and inflation is done for good or something like that, all the animal spirits will come up and we'll go beyond 4,400. And that can itself, that wealth effect and other things can itself get the inflation back up. So I don't think Jay Powell says anything like that. So these rates going up should keep a lid. The most important thing is should keep a lid to where SPX can go in terms of it can go to 4,200, 4,300 max, right? I don't see it going above 4,300. So that's the reason I am looking at some kind of rotation out of values. That is the reason I did Caterpillar short. And then now I went ahead and did XLI, another similar thing. That is the reason I'm doing the same thing. Okay. Now, so this has not yet broken down. Okay. So I am early to this XLI trade. I'm early to this XLI trade. I'm not early to Caterpillar. It has just not worked as yet. Now, what else did I do? Sharp, right? Sharp, the earnings trade that I have. What I did was I bought the 52, 56 call spread. Okay, CDS. I financed it by selling a 45, 40 put spread, right? Put credit spread in April. Okay. So now what did I do? I had my shop is the total credit that I received, right? I financed it. So let me go through my notes. Okay. So what did I do? I got this is my trade, right? For this credit spread, I got $1.48 credit. And this debit spread got filled for 70 cents. Okay. When it popped today to around 52, I closed this for 115. Okay. Closed it for 115. That means I got 33 cents. Okay. Now I am profitable to this already because it has run up. Now my cost basis, because of this, I have no margin at risk. I took some profit out. But if I subtract this 33 from here, because I got that credit, right? Now I have only 37 cents call debit spread. If before end of day, if I see any reversal or if we've gone up pretty much and I can get a profit here too, then why would I not take it? Why would I risk it? Or I can just convert this, okay, sell a 56 60 credit spread to make it a butterfly. Okay, to make it a butterfly, kind of a free butterfly. Let's look at it actually. How does that work? Okay, this is a good exercise. So this trade is in my another account, so you won't see it here. But I have a 52, 56, right? So now if I sell 56.60, nice, okay? So think about it, okay? I am getting, let's see what it is, okay? First 52, 52, 56 is 167, okay? Is 167. So let's think about it, okay? How does that work? I have, because of me, okay, I have put in 37 cents. Now I'm counting the credit that I took for the close position of Shopify, right? I sold the credit spread. So this is 37 cents is the debit that I have put out. I can take my profit by selling this, okay, at 170 or so. That gives me quite a bit of profit, right? I would have made 130. That 37 cents has become, okay, $37 has become $130. It's good P&L profit for one day. But if I still want to participate in it, and you think it doesn't go beyond 60, right? If you think it doesn't go beyond 60, I can actually sell this 56, right? 56.60 call spread, correct? For 83 cents, right? I can sell it for 83 cents, which means what did I do? I would get this 37. I can sell it for say 87. Okay, I'll just make it easy. I would have booked 50 cents profit on it, right? And now I have a free butterfly. I have a free butterfly for earnings. I have a free butterfly for earnings that if it pins at 56, I can make 400 out of it. If it comes anywhere, it just needs to be below 60 for me to still make some money. Okay, so a free earnings trade, nothing like it. So I can keep waiting for end of day to see where it is, and if I think that it can go beyond 60, then I'll just take my debit spread and be out of it. Well, I don't need to hold it through earnings. But if I think it's not going to go over 60 because we've already run up a little bit, then I can just convert to a butterfly free of cost and keep it and have my luck. Now, Airbnb put calendar did not work. Okay, Airbnb put calendar did not work. I was bearish on it. That has not worked. So that's going to be a 78 cents loss, 78 cent dollar loss for me per contract. So that didn't work, right? This is, now if you look at it, this is another interesting thing to see, because there is a gap here, okay? There is a gap here that it has, it has gapped over the gap. So this actually is going to be an island bottom. As long as this gap remains unfilled, we are having an island bottom in it. And you can look at it from a technical perspective. On the weekly chart, you have this as an inverse head and shoulders pattern, okay, which is going to be leaning way like this. This has broken out. So Airbnb is going to be now a buy the dip kind of a stock, right? And I hope, I mean, it can get to this 150 area, and then it should technically find some resistance, because if you look at it, it is over here, right? The 100-week moving average is at around 139.42, and then this whole thing, its IPO is at around 145, right? IPO open is at 146, And so many people have waited from this, December 2020 to get break even. So it's anywhere from this 140 to 145 area, 150 area, right? 145 to 150 area. There should be some kind of selling, consolidation, or anything before it can try to move higher. So that is where I am looking for buy the dip in this for sure. Unless we get some kind of economic data, I think this is a reversal. Okay, this is broken trend from downtrend to uptrend, and I am definitely looking at it as a buy the dip with an island bottom. What else do I have? Boeing, right? I have Boeing 217.50, 220 call spread. Okay, for this week. It is broken out. It went to the 220, but it, right, over here. Now it is just an inside day, and it's Wednesday. Thursday, Friday, we can still get to this place. So I have not gotten rid of it. But if I see it, it's just about to fire long in terms of the TTM squeeze. And I have 230 as my price target there. So what I did was I went ahead and do a calendar. Again, so I sold the 230 in March 3rd to buy 17th March, right? 230. So that's, I think, a couple, $2-3 loss as of now today. But this is in anticipation that we break out over here to 230. That's Boeing that I did. I did Boeing, I did XLI. I told how I modified the Caterpillar. Airbnb earnings lotto trade was a put, which was a loss. Then Shopify is a profit. Another one that I did was Toast. I think I paid $1 for it. Did I post it? I think I posted. Yeah, I posted it. Yeah, I posted it. So there were a lot of March 28 calls came in. There is this gap over here, and then it can come here till this 29.09. This is the level that I'm thinking. Why am I thinking this? This has ran up, of course, right? Where was it in January? Yeah, it came from 17 to 25. So it is not that it has not run up. But if you look at it, flow came in and restaurants are doing well. Toast is a software for, cloud for restaurants and everything in terms of that. So software is running and we are eating out more. We have the unemployment is so low that people are ready to spend. So that's the reason I'm looking at over here for this thing. Now, again, in terms of configuring the trade, right? There was this, okay, 28 came in. Okay, the flow that I saw was 28 calls came in, $1. Now it was, I think, $1.10 that it came in for. And then by the time I saw it was higher, $1.20. I already had Airbnb not work for me. Earnings is still a lotto, right? The earnings is tomorrow over here. So trying to get a 28 over here, right? 28 over here in terms of a calendar. 28 calendar was 70 cents, right? So I'm like, okay, I don't want to spend that much money. Not that much money. I wanted to, if we start running, it can keep running. But I didn't want to spend because I had gone through a thing. In the morning when I was seeing there was not that much flow, it was almost 80 cents in the morning when I took the trade. The calendar would have been 80 cents for me. So I decided to do a 27.29 call spread in 27.29 call spread for 50 cents. I'm fine with that. This was also not a bad trade. right? Doing a 28 calendar. But at that time it was 80 cents. I wanted to spend something around 50. That's just me, anything between 50 to 70 is my earnings lotto trade in my head. I'm fine with spending that much money. And that's the reason I configured the trade that way. So now, even if I think that, if I can get, and the reason why I did that was, if the market pulls back before end of day, I may just go ahead and do the calendar also. Let's see what I do. But this is how I configured it. That's what. Another one that I saw was Upwork, right? This has just not run. We have a lot of, people are doing. So this can, it can come to the 16 area if it wants to, but it's too small to try and do something with it. I'm more convinced about Toast than I'm convinced about Upwork. That's why it didn't do anything with it. PNW also keeps, FT&T ran up on earnings. PNW is having earnings. I have been looking at what to do with this. So, it's breaking out. It has earnings coming up next week. So I still have time, but it has been, again, everything in tech land has been 5-6 weeks of continuous running, right? 6-7 weeks of continuous running. So I don't know. That's the reason I'm not done anything with it as yet, but I'm looking for a trade in either, like, this has broken out over here and it's continuing. This was the earnings week. It is continuing there. So ZS is another one that can probably run. Not yet decided as to how to play these, but either ZS, CrowdStrike, but PNW is definitely a place where I want to try and do something for earnings. Still have time. Didn't see a positioning that I could get behind very well. So I have done nothing as it for this. In terms of the market in general, again, that's what I said, right? As long as, I sold a 41.70, 41.75 call spread for this Friday. Some of my SPX trades have not been working. The credit spread trades have not been working, the 0DT ones. So I gave myself some time, trying to give more time, at least a day or two more, so that I can adjust or get out of it if need be. The 0DTEs this last 2 weeks were not working for me. So I have modified myself. I have taken the put calendar as a hedge, and I have sold a call spread, giving myself some time. Now, again, we can say that's what, right? If Google is running today, some of the other tech is running, but ADM, and some XOM, Caterpillar, all these names are down. So these being down, UNH, right? These being down, while others running, is keeping sideways. Actually, this is still strong. I mean, with VIX expiration, I thought we would go down to at least test this 4100. SPX, we have not done that also. So the resiliency of the market is to be noted for sure. That's all for me for now. The only hedge I have, if I count it as a hedge, SPY put calendar is one that I have. But call spread is my cash flow trade. Call credit spread for SPX is my cash flow trade. Caterpillar and XLI and FSLR. These three are my puts that I'm looking for bearish moves. Meta and Netflix is me just looking at consolidation and small fade. Okay. So that's all. I'm done for today, and happy trading.